And hello again. Welcome to Tuesdays with Lloyds. Thank you for joining us today. As we've discussed in previous sessions, our theme for 2024 is innovation. And perhaps nothing is more prominent and far-reaching in this regard than the profound digital revolution this industry is experiencing. We see it in the press continually, the massive new influences of AI, big data, automation at scale, machine-to-machine capabilities, and so on. According to PwC, what they refer to as the fourth industrial revolution will change the insurance industry, writing, quote, "At the insurer of the not too distant future, there will be clean handoffs and interactions between customers, brokers, underwriters, insurers, reinsurers, and claims providers. The concept of multiple systems and platforms will disappear, replaced by seamless workflow integration, much like access to a full range of television content through a single app." So, certainly a lot to think about, but no worries. To help us unpack all this and better understand what it means, we are joined today by two experts from leading managing agent Hiscox, who will discuss how their firm has fully embraced this revolution and the role it plays in their future business planning. Joining us today from Hiscox are Tom King, Floodline Underwriter, and Joseph Pennyfather, Binding Authorities Line Underwriter. Just a reminder before we begin, we encourage you to submit questions for our guests using the Q&A tool, as we'll have some time toward the end to take those up. And with that, Tom, Joe, welcome to Tuesdays with Lloyds, and let's just jump right in. Tell us how Hiscox has embraced a digital approach in the development of your insurance products in flood and property binders.
Yeah, so firstly, it's great to be here with Tuesday from Lloyds, and thanks for having us on, Pat. It's one of our favourite topics to talk about, given how big Hiscox London market have been and how much we've invested in digital insurance products. I guess most notably on those is our private flood product offering, Flood Plus, which I look after. And this is a product where really it's underpinned by technology, and we use technology and digital to deliver it to cover holders and agents. We developed an API for this product, so it's entirely distributed via API. And what that does is it enables two or more software applications to communicate with each other. So we connect into a cover holder system, and this really allows them to integrate Flood Plus into their own offering or front end with their agent. And it also then allows them to offer Flood Plus flexibly and I guess provide more choices to their retailers, agents, and then ultimately to the end customer. That API gives flexibility as to how the customer then accesses the products. And it also limits the friction in transaction journey from that quote to buy. So it enables quicker quoting, quicker renewals. Also allows us to feed in models, more accurate pricing, and ultimately deliver a better product to the customer and the agent. We launched our product in 2018, our Flood Plus product. Since then, we've grown it to 94,000 in-force policies, nearly 120 million of premium. We've now become the leading flood underwriting company in Lloyds. So we're writing 94,000 policies across 4 underwriters at the moment, and we expect that to be over 100,000 by the end of the year. And I think it's fair to say we wouldn't be able to deliver nearly that number of policies sat at the box, stamping and rating in Lloyds, and without this sort of digital offering.
Amazing. How many, what percentage of those are in the US? Do you have an idea?
So that's an entirely US book. So we offer, it's a residential, commercial, primary full value excess product entirely for the US market. So yeah, it's been a real right time with entering the flood market, but also Flood Plus and digital has really allowed us to scale that both on a top and not, I guess, on a bottom line basis as well.
Yeah, I think I'll jump in there. Thanks, Tom. I think, following the success of Flood Plus, which was, a huge success from 2018 its genesis, we learned a lot about building a digital product throughout that journey. And just in building new products and maintaining the products, we have a fantastic team in York that help us do that and help us maintain the systems that we do have. but you have to, kiss a few frogs and learn lessons in order to get there. And on the back of the success of Flood, we have heritage as Hiscox in high value homes, and in particular in the US. And so it was fitting to launch a new product, which was Bind Residential, which is short Bind Res for short, right? Which is part of the Hiscox Plus series. You've got Flood Plus and Bind Res, and it's been a resounding success. We've seen huge growth since its inception. We quote around 17,000 policies a year, so not quite the dizzying heights of Flood at 40,000 quotes a week, but we're talking about an entirely different product here. It has multiple iterations of quotes with different perils and much larger limits. So it's something we're particularly proud of, right? We're always looking to the future, but long may this success continue.
So you said Flood is 40,000 quotes per week. That's staggering. I didn't realize it was that much uptake.
Yeah, so it's a huge number, and I think on that it's right on those 40,000. It sort of manifests in different ways. Some of those don't necessarily make it to the end user, but it's sold alongside. We've got the way with digital, and the way we can then show it on the cover holder or agent end means that we can cross-sell along a homeowner's quote, a commercial quote. It can be sold as a standalone Flood. We can hit the API once and give an indicative quote and go, right, if you answer these 3 additional questions, you can get a true quote. So just being able to do that means that the digital allows us to scale, allows us to give that number of quotes. In reality, the conversion is lower, but actually when we're looking to find the best risk or the best risk characteristics and are competing on price with other privates out there or the NFIP, just being able to transact that volume of quotes enables us to put prices out there. Agents then need to take it, show it, especially when it's a wider offering than what might be the alternative with the NFIP, either as an excess or full value. So there's a incentive then for the agent to say, look, we do have this wider product, put it in front of a customer. And like I said, there's no way we'd be able to do that without having it fully automated and light touch.
Fascinating. It's like so many other things, it's a numbers game. So from the cover holder perspective, how do you engage with your cover holders when it comes to developing a digital approach or format? And I guess more importantly, what are the benefits for both cover holders and their clients?
Yeah, I think engagement is a really good thing to touch on, right? Because it's absolutely key. Our distribution partners are exactly that. They're partners, right? We don't want to go away and build a system based on our view of the world to then plug into our cover holder partners and not interact with the user interface, or they maybe sell things slightly differently. So, we have huge amount of experience and expertise in this market. So do our cover holder partners as boots on the ground. We like to interact with them. We have multiple sessions in order to how best to design our product to ultimately provide the best solution for the customer. We always have a customer first approach when we're building out the API, and it's not a straight road like everything in life. There's a few left and right turns to get there, but you've got to go through the rigorous testing and conversations in order to get the perfect product out there, because we're in a competitive world, right? There are other competitors out there that are building similar products. There may be slightly ahead, slightly behind, but we're really walking in times where others are waking up to the fact that you need to embrace technology. And so more and more digital products will evolve. So we've just got to make sure we build the best version of a product that we can.
Yeah, I think there's no point us building something that works for us and not for our cover holders and our agents. I think we've just done a recent redevelopment of Flood Plus. We moved it from on-prem onto Azure into the cloud, sped up functionality, completely rewritten the code. We could have done that from London, but I actually went on the road with a developer, with our BA, and we just went into our current partners' offices and said, what do you want from an API system? We know what we want, but how do we make it fit for purpose? How do we make it sync with your system? How does it manifest? And we actually designed it around that. It has to be a strategic partnership, and now we're launched. It's a constant feedback loop. We're having IT calls as well as business calls, and it's around functionality. How do we improve the API? Where are the potential holes or improvements? But also then around the competitiveness of the product, our pricing, which we're then with the API we can constantly tweak and make real-time pricing updates in real time to kind of feed back on that.
Yeah, and I'll just touch on the benefits. You asked that question, Pat. I think, look, the obvious one is speed of service, right? In terms of getting a quote here and now and having multiple options on that quote, it not only puts you ahead of the game from competition, but it's providing the customer an instant quote, which is often what they want, and particularly in the high value space where customers, they demand a quote now, and having a quote now will get you ahead of the game even if your pricing is slightly differential. And we were helped in the last 18 to 24 months where the high value market, in particular in the US, really tightened up. Right, there was an exodus of capacity domestically and across Lloyds, and quite often we were one of the only players in town. Now, to have that level of distribution we had on the buy and res product, it meant customers that were struggling to get a quote could now get one, pretty quickly and promptly. So for us, providing a solution to the customers out there is the most important thing, and a digital product allows us to do that.
I think you touched on a key element when you say you're looking at what does the end user need, because I think we've all been in a situation where developers hand us a product. We know what you want, here it is, but without that, how we want to use it and get that continuous tweaking and feedback, you're going to end up with an inferior product. So I was particularly struck by that comment that you made.
Correct, and the same goes for like future maintenance, right? We're always tweaking the product. Tom mentioned the upgrade on the flood side. We're doing the same on the buy and residential side. There's a huge time and financial cost to that, but it's for the greater good, right? It's for getting an improved product out there that's better for our customers. So we're embracing it.
And as you said, there are more and more people coming into this area, so you have to be on top of your game to stay out front.
Yeah, I think we're conscious as well that it's a cost to a cover holder to build a system as well. They don't want to be building, updating, and especially as others within Lloyds, syndicates, domestics are all building APIs. There's only a certain amount of resource or like cost allocation to building these. So we need to make sure it's right first time. And actually we can have a system that is robust enough to not have breaking changes and is future proofs, at least in the medium term, where those like short, hard sort of rebuild updates don't need to be done.
Absolutely. So we've talked a bit about how this directly affects Hiscox, but let's maybe take a step back and explore, why is this beneficial to Lloyds generally for Hiscox to develop its digital offering?
Sorry, Pat, my connection broke up there. Can you repeat the question?
Just saying, why is it? We've discussed how it's benefiting Hiscox specifically, but why is, in the larger view, why is it beneficial to Lloyds as a market for Hiscox to develop digital offerings?
Oh, absolutely. I think it's to maintain competitiveness, right? I think we are a market soaked in tradition, and a lot of that tradition should and will remain. And I think that's a fantastic thing. But is there a portion of the market that needs to be more efficient, can be digitized, and can provide better solutions, which will open up the door not only for existing business within Lloyds, but also bring new business into Lloyds, right? Lloyds has huge growth plans, and we want to be part of that. Hiscox has huge growth plans too, and we want to do it in the right way and in a profitable and a safe way. And that's what's so important about transferring our underwriting expertise into a digital product in order to just scale. Tom mentions he built a huge book with 4 underwriters there, right? You wouldn't be able to do that without the digital product. So I think in order for Lloyds and for Hiscox, synonymously to build the growth that we desire, then it needs to be in a digital fashion or have a digital element to it.
I think for Lloyds, it's technology is an increasingly critical route route for business into London, and for us to maintain our competitiveness and just viability, I guess, as an international insurance market. London's been known for doing things differently over time, whether that's distress or unusual risk. That's still the case, but delivering a innovative and digital product becomes the USP for London. It means we can be more nimble against the competition. We can make pricing changes that traditionally took London 30, 60 days to make, we can make in a minute. And that automatically then starts flowing through to cover holders, to agents. And we can see the impact of that on a quote, then through to binds. And if it's doing what we want or it's not doing what we want, we just tweak it again. So we've then got total price control. It means we can then more sophisticatedly deploy aggregate. We can go to our reinsurer and say, look, this is how we are using your aggregate, which are on a quota share, and how we're deploying it. We're being sophisticated with the way we're pricing. We can pull in models in real time. So it actually just makes our London offering and the Lloyd's offering just so much more compelling for markets coming in, getting correct and nimble pricing, but also then for additional capacity coming into Lloyd's from a reinsurance base.
I think it keeps the business sticky too, right? We work in an E&S market we operate in, right, which ebbs and flows with business flowing back to the admitted market and in recent years, into the E&S market. And we're not saying, for 1 minute that we're gonna stop that flow, but if we can make business more sticky within Lloyd's, then surely that can only be a good thing.
Oh, absolutely. And the comment earlier, real time. I mean, it's quite a change from just 3 or 4 years ago in terms of the turnaround time. So when you say in seconds versus 30 days, yeah, it's just sort of striking, but necessary because it's the way the world's headed.
I mean, I look at it like 8 years ago when I first joined Hiscox and we were at the box, we would have old Excel rating matrix. So we'd make a change on that. It would be a whatever quarterly vintage, push that out via email. It would take say that would take a couple of weeks because it gets lost and you have to resend it. Then it gets programmed in. Then we have to wait for the quotes, those to convert. Then the bordereau come through. You're talking a sort of 4 to 6 month lag between a pricing change and seeing any impact. It's crazy that we've then shrunk that from that time to pretty much hours or days when once quotes actually flow through. We make the pricing instantaneously and then it feeds back through. It's the scale and time that's changed in a very, very short period is kind of crazy, really.
Absolutely. Yeah, it's just night and day for sure. Well, then let's take that concept and tease it out a little bit and be a bit provocative. We always talk about the importance in this industry of face-to-face communication and trust and particularly at Lloyd's where it's so one-on-one oriented. But so what effect does all of this automation have on person-to-person interaction? I mean, like, does going digital get rid of the need for human relationships?
I thought you might ask this, Pat. I think, look, even though Flood Plus is fully digital in terms of pushing out the product, the quoting, the binding, it's never going to be a purely digital product, and we're never going to be a purely digital syndicate. I think we work in a specialist market, and human expertise is always going to be at the core of what we do. I would say pretty much all our cover holders are people-centric businesses. So it's really about us using data, using technology to allow those human underwriters and their agents to gain efficiencies, to get a more accurate pricing of a risk, and get a better underlying risk quality. I think, if anything, the technology helps that human side and enables them to use that data to build deeper human relationships, and just get a clearer idea of what the underwriting is doing, what the portfolio is doing. So I think, if anything, it's the opposite. And as the fact we're all sat here around talking anyways, does keep that human element.
Yeah, I think it goes beyond that, Tom. You're right? It makes you a superhuman rather than just a human element. You become a superhuman, right? This is to aid our underwriters and aid the human touch, not to replace them. And I think there is so many tools now that it's very early on in its development, right? You've got machine learning, you have AI. There's lots of speculation about where that can go within the next 5 to 10 years, right? It's mind-boggling, but we're looking at these tools, with a view to how better to provide, better products to our customers and how to equip our underwriters with better tools. So that human element will always remain. Throughout this conversation, we've mentioned about speaking with our cover holder partners, working with them to develop products, trading with them. There's still that human element is very much still there, and it's been the huge part of what Lloyd's do. We will continue with that.
So yeah, it's a tool that facilitates but never replaces is the way to look at it, I suppose.
Right.
So let's look out the curve a little bit. What's next for you as line underwriters from a digital perspective?
I think the main thing is just continued growth of our digital offering. I think digitally traded private flood, and also on the wind side is a significant strategic growth opportunity for Hiscox London Market. We've got backing from internal level, our reinsurers from the board at Hiscox, and the attention is on digital as a new growth, the key growth area for us, especially on the property side. So it's about just continuing to evolve our offering. I think we have to a certain degree, a first mover advantage. We launched our initial cuts of the API very early compared to the rest of the market. So it's continuing to evolve those to meet the needs of our clients, our partners, and developing that. I talked about the update to our API and our product suite earlier this year. That also allowed us to update our flood appetite, our policy wordings, and really just have a new look. We've added excess as an automated product. So it's just continuing to evolve that.
Sorry to interrupt, Pat. To summarise, Tom, I think there's two ways to look at it, right? There's improving existing products out there. We have with better tools and improving tools too, right? There's every year and every month we have new meetings with third-party vendors to understand how we can enhance our product, right? And you kiss a few frogs, and you got a lot of work to do to get to the right product. But there are fantastic products out there, and there's many tools we can use to enhance our products even further than what we have now. And then on the other side of it is developing new products, right? We've learned a lot of lessons. We've got the infrastructure, and we have the know-how to build digital products, right? We've got the underwriting expertise that we've had for a very long time, and now we've got this new digital approach. It's again, sky's the limit. What can we do? And after we launched the buy and residential product, and that's been going for some time now. We've now launched a wind deductible buy down product, right? Mm-hmm. On the back of good time in the market, people are paying more higher deductibles on their overlying products, right? So if you're living in Miami now, you could be paying a 10 or 15% deductible on your property, right? We want to provide a solution to buy down to allow customers to carry a smaller deductible into a wind season and be a little bit more comfortable on that front. So the market dynamics always help, and we've got to be smart about where we place our bet. But another digital product and focus, where we know is the right time and the right product is key going forward.
Definitely exciting times, and the future looks very bright. And like I said, I can tell from your passion about this. It's exciting. Like, what will it look like a year from now? It's just hard to say. We've got a few questions that have come up in the Q&A box. If you want to take a look and see if you want to tackle a couple of those.
Yeah, I'll jump in. There's been a couple of questions, I think, around the API capabilities. So at the moment, for both our products, it's a purely pricing. So the way it operates is a stages of the pricing life cycle. So it does pricing, binding, then the policy life cycle, which is endorse, cancel, rewrite, reinstate, and renew. What we don't do at the moment is go all the way through to policy documentation. So we still rely on our cover holders, the sort of true expertise there in terms of policy issuance, attaching forms, state regulations, filing of taxes. All of that is still done by our cover holder. We're just purely looking for this is the price for the risk. You let us know when it's bound so we can see what we have in real time with our aggregates and the data and make pricing decisions on that. But issuance is still done by the cover holder end.
Yeah, I think I'll pick up on another question in the Q&A section about there's a question around, are these products available in Canada, or will they be available in Canada? So on the buy and residential side, it's a US only product, right? And it is for flood too. It doesn't mean we're not exploring what the future can hold. I think at the moment, the US is a huge mass market, and we have a long history there. So it's an obvious place to start, and we have fantastic partners there. So I think you can see endless growth in the US alone. But It's not to say our journey ends there, right? As technology improves, mapping tools improve and catastrophe risk tools improve, we could move into other territories. We have the know-how and the digital mindset, right? So we're not doing Canada right now, but who's to say it won't be in a few years down the line?
There's just another question from Robert Rector. Thanks for the question. Around us seeking additional digital distributor in the US. I guess the answer is always yes. We're looking to expand footprint sales with Lloyd's approved cover holders and MGAs. So we don't go to the agent. It's all through standard Lloyd's binding authority contracts. And certainly we're looking to continue growing both these products. We think the market on both flood and the wind side and the wind deductible buyback is huge. And actually, like you say, it becomes a distribution. The more quotes we're getting out there, the wider the footprint we're getting, the wider the reach, is sort of really what underpins this. The technology allows us to do that, but we're still relying on that, like you say, the human part, cover holders, agents to get out there, put information in the system, get quotes, put them in front of customers, and actually offer them a product and potentially a better price around and really address their insurance needs. So yeah, inboxes are always open for questions or contact as well.
Good. Have we exhausted the questions? Excellent.
I think we might have.
Yeah. Okay. Well, look. That's I'm just taking a look at the clock, and that's probably a good stopping point for today. Tom, Joe, thank you both so much for sharing your time and expertise with us today. We greatly appreciate it. And that will do it for this edition of Tuesdays with Lloyds. As always, we hope you enjoyed it and that you also learned something you didn't know before. We'll be off in August for the summer break, so be looking for additional programming updates as we near the fall. As we close today's session, please do take a moment to answer the survey questions that will appear in your browser. Your candid feedback is very important to us, and it helps shape our content and style. We'd also love to hear from you on any other issues or comments, including future topic ideas. Drop us a note anytime at usevents@lloyds.com. So until next time, let's keep staying connected. Take care and have a wonderful rest of your week.